I'd like to welcome you all for your participation today. The subject of today's webinar is going to be on contactless EMV payments, and we're going to be focusing on what the issuer opportunities are for contactless EMV payments today. So if we could turn to the next slide. For some of you, this may be the first Smart Card Alliance webinar you've participated in, so let me give you just a quick background. This webinar is brought to you by our organization, which is a nonprofit, multi-industry, member-driven and supported organization whose mission is to stimulate the understanding, adoption, use, and widespread application of smart card technology. And we do that through a number of outlets, educational programs such as this, as well as white papers and market analysis reports, and outside advocacy activities and PR and industry relations development. One of the ways in which our organization's members stay connected to the market is by forming industry councils, which represent a specific forum for subject matter experts with similar interests and expertise to meet and work collaboratively to address market needs. One such council is our Payments Council, which is the group that is responsible for today's content. The Payments Council's mission is to facilitate the adoption of chip-enabled payments and payment applications in the U.S. market. That organization has produced a number of deliverables over the past years, and some of the most recent resources that have been provided by this group related to today's topic are the Contactless EMV Payments white paper on benefits for consumers, merchants, and issuers, and a recent report on EMV and NFC, how they are complementary technologies to enabling secure contactless payments. You can find these and other resources on the Smart Card Alliance website. So if you go to the next slide, let me introduce you to today's subject matter experts and presenters and their topics. So our first presenter today will be Oliver Manahan from Infineon Technologies, and Oliver will be talking about the value of contactless and why we are talking about implementing contactless now as we are just going through another major change with EMV. Oliver will be followed by Jose Correa from NXP Semiconductors, and he's going to be talking today about some experiences in other markets outside of the U.S. and what are some of the lessons learned about the implementation of contactless EMV payments. Jose will be followed by Nick Pisarev from Giesecke and Devrient, who's going to be talking about contactless EMV payments and specifically addressing some of the benefits that issuers can achieve by following through with the implementation of EMV with contactless capability. And Nick will hand off to Jamie Topolski from Fiserv, and he's going to be looking at some of the implementation considerations that issuers need to consider if they are thinking about implementing EMV contactless. So I will come back at the end to moderate the Q&A session. And just as a reminder, this webinar is being recorded, and both the presentations and the audio will be made available to you after the webinar is completed. We'll take a few days to get the audio content uploaded on our website and send you out an email confirmation with the information and login to get access to that information. And we would encourage you to share that information with others in your organization and your fellow colleagues. So with that short introduction, let me turn today's webinar over to our first presenter, who is Oliver Manahan from Infineon Technologies. Oliver?
Thank you very much, Randy. And if we could please go to the next slide. So the question we get asked from many stakeholders over the past couple of years is, listen, we know that this has been tried before, contactless has been tried before in the market, and there's trials just over a decade ago. And there were some merchants that enabled for contactless, and there was a handful of issuers, but really not enough either cards or merchants to get critical mass or drive adoption, modify behavior. And I think the issue at the time was that there was no real or clear benefit to the various participants. I mean, swiping a card was perhaps notionally slower than tapping a card, but it really wasn't a huge time difference. And you could then argue that a signature was required for certain transactions or a PIN was required for certain transactions, and then that would be slower, and contactless transactions took away the necessity for those under a certain dollar amount. But then some of the global brands found that because that was popular, they decided to also not require PIN or signature under a certain dollar amount for swipe magstripe transactions as well, which really sort of reduced some of the potential benefit of contactless. From a merchant perspective, point-of-sale readers were add-ons, so you actually had to buy a separate unit, you had to plug it in, figure out how to do integration, etc. And then it also took up additional incremental counter space that, frankly, they could use for other other signage and things like that is sometimes at a premium. And the actual security of the contactless specification back in those days was based on magnetic stripe technology. It did have some dynamic data in it, but not as robust as the EMV standard that is now rolling out. So what's changed between then and now? Well, contactless is based on, as I just said, the more secure and robust EMV standards, which also has a couple of incremental benefits, one of which is there's global interoperability. It is the highest standard of security. And as merchants are rolling out new point-of-sale devices for EMV, in most instances, those devices actually come with contactless capability or the hardware already embedded in those devices, so then it just becomes a question of do they enable it or don't they. So if we could have the next slide, please. So I think when we talk about either a new product proposition or a new feature within a product proposition, it's always important to start with the consumer, and is there a benefit to them? And if there's a benefit to them, then you can sort of move down the value chain and say, is there a benefit to issuer, merchant, brand, etc. But if the consumer doesn't feel an affection for it, then it becomes more difficult to launch the product and get it off its feet. So we have definite proof that consumers prefer tapping a card versus dipping a card or inserting it and waiting for that transaction. So it's definitely an easier and more intuitive transaction, and certainly it's faster for the consumer. So everybody lives busy lives, and if you can save a few seconds per point of sale transaction, then consumers seem to like that. And in other markets, we've seen that consumers tend to increase the usage and frequency of their cards, so they don't have to, encumber themselves with cash, which can be dirty, heavy, bulky, etc. And in other markets as well, they tend to seek out issuers of DI or dual interface cards. Dual interface being the contact chip plus the antenna for the contactless interface as well. And there's no forgetting your card in the EMV reader. You don't walk away and leave it in there. Obviously, the card never leaves your hand, so therefore there's nothing to forget. And I think, as importantly, it's what else can you do aside from payment. And one of the great use cases, as we've seen in London as an example, but closer to home, Chicago, the Transit Authority, the CTA, you can now use contactless open-loop payment cards to ride the subway. In TfL, I think it's all lines. In Chicago, it's the blue line, but it's absolutely a great use case. And when consumers start using the cards more frequently for those other use cases, and there's others as well, then they start just using that card with top-of-wallet behavior. Next slide, please. So as we look down the value chain, the next and obviously the focus of this webinar is, so what's in it for the issuer? And as we introduced EMV into the market, there's an obvious increase in security of transactions. So counterfeit fraud goes down, et cetera. An unfortunate side effect of that is that the transaction time also tends to increase. So as you move to contactless, the EMV security is still embedded within that transaction, but the transaction time is significantly less. And of course, of paramount importance to an issuer is top-of-wallet behavior. How frequently does that card get used? And certainly in other markets, and I think Jose will speak to this a little bit next, is that consumers who use dual interface cards use them more frequently, particularly for lower value transactions, coffee shops, things like that, which is then a tender shift away from cash to electronic. And the vast majority of face-to-face transactions are still card-based, so dual interface cards help shift consumer behavior to a tap mentality, thus enabling a shift to mobile. So, we've seen a lot of the pays and mobile wallets, whether Apple Pay, Samsung Pay, Android Pay, have been met with, I'd say muted success. Some people love it, but most consumers really look to pay with a card still, and unless you're an early adopter or technology aficionado, you may not necessarily know that you can enable your phone to do contactless transactions, but you certainly know you can pay with your contactless card because that's what you've been paying with a card for 30, 40 years. That's the natural extension of how you do payments, which, to this point, will hopefully help the consumer behavior modify such that they will start using mobile phones for payments as well. Next slide. And of course, the merchants have to have something of benefit to them as well. It's, this is where the rubber hits the road. They have to make an investment. They have to enable these devices to accept the contactless payments. And as noted with the issuers, the EMV transaction unfortunately adds a little bit to the transaction time. And there have been some brands coming out with versions of Quick, EMV, Quick Chip and things like that, which certainly reduces the time of what we're seeing on the average contact-based chip transaction, but still, takes a few seconds and is not as fast as tapping, which is typically under half a second. So then contactless, if enabled, will reduce transaction times, which then means faster lane throughput, and certainly for merchants that place a premium on how quickly they can get people through the line, particularly at peak hours, there's a clear benefit there. As I noted in the first slide, with the EMV migration, most new point-of-sale devices have contactless capability built in. So it's no longer a decision of, do I buy a separate unit and do I have to integrate it, et cetera, but do I enable this unit? Certainly there's testing, certification, perhaps some software development to be done, but it's not as onerous a task as it was 10 years ago. And then enabling for contactless cards also means enabling for any contactless device. So once that point-of-sale device is enabled, it can accept contactless cards, contactless enabled mobile phones, wearables, et cetera, which then I think also promotes the merchant as being, an early adopter, tech savvy, somebody that, a technology focused consumer might want to go to and use because it's cool, it's fast, it saves them time, et cetera. So next slide, this is sort of my wrap-up slide, I believe, which is really the pyramid of new product or new feature launch. And so what's in it for the consumer? It's fast, it's convenient, it's secure. From a merchant perspective, it's also fast, secure, and there's that progressive angle to it. From an issuer perspective, again, heightened security. There's definitely consumer preference. Again, there'll be more about that over the next few slides, and the potential for new use cases, again, such as transit. And for the networks, whether global brands, regional networks, et cetera, heightened transaction security, but also an increase in transactions, which obviously helps the issuer as well. Again, to the point of, people tend to use quick payment methods more frequently that they would have perhaps pulled cash or coins out for in the past because it is fast, they don't feel they're holding up the lane, et cetera. So that's sort of the why now. I'll pass it over to Jose, who will talk about lessons learned from Australia, UK, and Canada.
Thanks, Oliver. So yeah, and a couple of notes here. We did have a session a few weeks ago. So if any of the participants of this webinar attended that session, this is going to be extremely familiar. It's going to look quite familiar. And then the other point, for those that weren't there, I want to be perfectly clear. I mean, we're not saying that that all markets are the same, and we recognize the uniqueness of the U.S. market. But we're going to look at 3 markets that we believe can provide some guidance and at least share some experiences of what they went through and what were the real benefits of the implementation. So if we can go to the next slide, please. And so we'll start with Australia. So Australia is a mature market for contactless cards. It is now a mainstream product and has been moving from what originally was just low-value transactions to pretty much every type of transaction. Today, it represents a spend of 3 billion Australian dollars, and over 60% of all debit transactions are contactless. So we'll definitely see a lot of adoption there. And the adoption is pretty much on everyday occurrences, right? And over half the population has used today a contactless card. On the issuance side, what's interesting here is that Australia is a market where both issuance and acceptance actually of contactless products grew even before mobile payments. So this was a shift that happened on the card side, and today 2/3 of the population own a contactless card. And those who own it, and 60% of them use it at least once a week, which is a significant, and that number has been increasing, right? Moving up from 43% back in 2014. So can we go to the next slide? On the acceptance side, we have both categories, so major merchants and small businesses already have contactless terminals in place. And in some cases, a vast majority of the transactions are contactless. On the preference side, consumers prefer contactless cards over contact cards when doing a transaction. And this is also quite particular on transactions under $100, which clearly shows that there is a potential of displacing cash. Now, can we go to the next slide? And we're going to go to the UK, which has a bit of a different situation, going also quite successful on the implementation. We have seen growth with contactless spend reaching now over 7 billion, almost 8 billion pounds, and representing more than double the amount of the previous 7 years combined. And this spend is expected to exceed 20% of all spend in the UK. On issuance, we have over 50% of all credit and debit cards now being contactless, and we'll see the reasons of it in the next slide. Can we go to the next one? And here, acceptance has been key, right? And there's no way around it. And Oliver mentioned a bit about different use cases, and in the case of the UK, Transfer for London played a significant role on the acceptance of contactless payments. TfL alone accounts for 1 million contactless transactions per day, and it's not only that, it's also over 460,000 contactless capable terminals in the UK, which guarantees that the infrastructure will continue to support the move to contactless, and they will leverage that infrastructure for mobile payments as well. As acceptance improves, customer satisfaction has also been on the rise, and with consumers highlighting the transaction speed, convenience, and safety. And Oliver also mentioned a bit on transaction speed, especially compared to traditional chip and pin. And in the UK, the perception is that the average time for a contactless transaction is at least 50% faster than a contact chip and pin transaction. Now, moving to the next slide, we're going to see now Canada, which actually had a similar situation to the US. as they implemented and pushed for contactless adoption back in 2005, also on MaxDrive data, MSD-based contactless transactions, with little success. And the reality is that contactless adoption only came after the EMV migration started in 2008. And the reason is quite clear. It was because the slower transaction times and were significantly mitigated by adopting contactless transactions in this market. By late 2014, we had over 70% of the credit and 40% of the debit cards supporting contactless transactions. And on actual usage, we see over 30% of all transactions are now contactless. What's interesting in this market is as limits have been raised on the amount allowed on contactless transaction, acceptance has increased, and it's been kind of like a linear increase following the actual dollar limit set on contactless transactions. So moving to the next slide on acceptance, there's a significant acceptance, over 80% on merchants on basically what we consider like low value categories. So grocery stores, quick service restaurants, pharmacies, gas stations, over 80% of those already support contactless. And when we look at national numbers, it's over 30% of all devices, right? And that kind of wraps up the lessons learned from different countries. And we now move to Nick, who'll cover benefits for issuers.
Thanks, Jose. So what we're going to focus now is specifically exploring further into more depth the benefits for issuers into deploying contactless acceptance, being that in a carved form factor of a dual interface card or participating into the mobile payment solutions that are available in the U.S. market. Next slide, please. From an issuer's perspective, Oliver touched on the fact that, and I'll say that contactless transaction is much more convenient to a consumer compared to a chip and insert transaction. We always keep the card in our hands. We never leave it in a terminal or hand it over to anybody as a consumers. And this really creates the convenience for the fact that as compared to now chip and insert, we do not need to look for prompt as to leave the card in the terminal, remove it now, all these beeps, all these guidance that the terminal has to do in order for us to complete a transaction. Contactless is simply a tap. You see an indicator lights lighting up that transaction was completed in a fraction of a second. So the consumer really see it right there in front of their eyes. They do not really need to follow instructions on the terminal as to when to remove, when to insert, and so on. From a securities perspective, as mentioned, even though we are completing a transaction within a fraction of a second, we are using the same EMV technology within contactless EMV transaction as we do for chip and dip. The next benefit we're going to talk about is displacing cash transactions and top of wallet. It has been shown, and there are no statistics in other countries, that enabling contactless feature on a payment account does represent increase in spend. The UK has shown it, Canada has shown it. A typical example of when that really is the case is, for example, being in a location where you'd really like to purchase a small ticket item, being that a coffee or an ice cream from a vending machine, and you don't have the cash. The convenience of pulling up a contactless device, card or mobile, and being able to obtain that small ticket item very quickly, very easy, without looking for cash, without looking for coins or bills, really creates this spontaneous behavior where consumers are actually more likely to purchase the item otherwise they wouldn't have. So that also creates a top-of-wallet experience for the consumer. In other sense, the consumers are seeing more frequently the face of the financial institution, the card or a handset in their hands, using it instead of cash or any other form of payment. And that creates further stickiness and desire to use that method of payment from a consumer's point of view. And the next benefit we're going to talk about is about security. So why is there a difference for contactless EMV compared to what we used to when we used a MagStripe emulation contactless? There's two major differences in deploying EMV contactless. One is, in general, contactless does provide a more frequent use, which helps the online detection of fraud much better for issuers, especially if they train their systems to make use of this more frequent transaction. But most importantly, one thing is to be certain, as opposed to falling back to magnetic stripe from contactless as it used to be for contactless only card, today the fallback from contactless, for whatever reason that might be, the consumer is not really willing to use contactless, or it's not readily available, the alternative to using contactless is actually inserting and not swiping. So that the reason is really important and is driven by the service code in the payment device, that this is a contactless enabled EMV card, and issuers can still benefit of the liability compliance of using contactless transaction, knowing that the security is not going to be circumvented by swiping as opposed to tapping, whereas the dip is really going to be requested as an alternative to contactless. So the next benefit we're going to look is the deployment. And this could be slightly difficult to understand, and I speak here for issuers who really have the experience in deploying cards with chip technology. Most of you have gone through this phase now, and you know what it is to implement chip cards. Some of the issuers have done the early contactless deployment, where they've experienced the net new complexity related to issuing a chip-enabled card. What is really the good news is now that we have made the biggest jump over to chip, and in mass volumes, not specifically to certain portfolios. We are now, as the issuers, issuer service bureau providers, experienced in issuing chip cards. Well, that's great news, because now if we are to start issuing a dual interface card, this really presents no additional complexity in terms of creating the profiles, in terms of personalizing the chip. The same contact chip technology is used to personalize the chip. The chip simply has, it's one chip, it simply has two interfaces, and the consumer can use it in other ways. But from a personalization point of view, it is the exact same chip. Yes, we do load a few more data elements during the personalization process in order to enable the contactless, but that does not represent a significant increase in complexity in doing the profile for dual interface card, or facilitating the actual process of personalization. And most importantly, issuers have now the experience of dealing with chip card issuance. And the last issuer benefits we're going to touch on is the global interoperability. And that does provide several benefits to issuers. Number one, in the past, the contactless MagStripe enabled cards used to be more prevalent to North American deployment. In other words, they'd work in Canada and the US only. The rest of the world was lacking behind in contactless acceptance, or they were already in the path to EMV migration. Whereas now that the whole world has moved to contactless, the cards that we issue today based on EMV technology are actually going to work everywhere around the world. So a consumer with an US issued dual interface contactless card could write the transit system in London, in Australia, or anywhere else with that same card which they have received issued by their issuer in the US. In addition, the product availabilities, the technology is now mature in global technology as opposed to being specifically developed for the North American market. This does offer the issuers more choice of different chips, different applications, different features, different deployment strategies and tactics, and it really does offer a globally available and mature product that has been deployed in hundreds of millions around the world. In addition to these benefits we've seen here, we're going to look at another one, maybe more so far out than those we've just listed, but something that from a technology point of view for those really that are exploring innovation and different consumer behavior and interaction, some ideas that we have seen of interest in other regions when issuers deploy dual interface cards in conjunction with mobile devices that have contactless interface enabled is the fact that now you have different ways of interacting with a mobile device and a card. That is, we do not need a slot or a MagStripe reader anymore. In fact, we have no need of any additional device to attach to a mobile handset in order to turn this mobile handset into a mobile payment, a point-of-sale device to accept transactions from a contactless enabled card. In addition, even beyond transactions, issuers can benefit of the fact that a consumer holds a contactless card by making a much more richer mobile experience with other banking applications. For example, accessing the mobile banking, enrolling a card into mobile banking, or authorizing high-risk mobile transactions that otherwise an issuer probably would have not allowed the consumer to make over a mobile device. So these additional features, now that a card and a mobile handset can talk to each other contactlessly, are really yet to be explored by many issuers and those who are keen on innovating. In addition to that, we should not forget that the chip is a chip. It does do much more than we use it today. That is payment transaction. It can also hold an authentication features and applications, or it can be used for access control. So this could be really interesting for issuers that have co-branding programs with either university campuses or with corporate portfolios, corporate cards for larger institutions where they can actually now open up this contactless technology to their co-branded partners or their customer organizations and benefit of these contactless features and capabilities of a dual interface card or a mobile handset in the hands of their card holders. And lastly, what I would touch in addition are some Q&As which are typically being asked by issuers and provide the answers here in terms of most common thoughts as to why issuing dual interface cards today. The most question we've asked ourselves so far is, I've tried it before, it didn't work, why try it again? Well, we've looked at this in many different angles up to now. Benefits versus complexity ratio is now much different. From both issuing side and acceptance side, complexity is now reduced in terms of add-on complexity to issue the contactless cards or to accept them, whereas the benefits are actually much higher compared to the MagStripe world. So this is really why we see this adoption rising so quickly in other markets. The next question is, if consumers want contactless, can't they just use the mobile? Yes, they could, but still, even today, if you look at millennials and statistics that are known out there with Apple Pay and Android Pay and Samsung Pay, we are not there yet to achieve a critical mass of habituation, so to say, habits to use the mobile device as a payment method. If it really is that we're seeking mass adoption, the only form factor that is mass used for payment still today and for the years to come is a card form factor. So yes, we could achieve some market penetration, but if we really want to reach the scale of where Canada, UK, and Australia is, in my opinion, we should also use and look at issuing dual interface cards, maybe for some portfolios. But if consumers really demand it, and we'll talk a bit about that, maybe U.S. market will become similar to those in Canada, U.S., and in Australia. The next question, there is no acceptance, so why issue cards? Going back to the first, for that little acceptance that there is out there right now, wouldn't mobile handset be sufficient? It is an issue. It is the chicken and egg problem that we've seen in the past, that we have seen in other countries. But as we will see on the final slide on benefits, our experience from other regions does say that it is a growing and a natural process from deployment versus acceptance. And where it really matters the most is where consumers interact frequently, in transit, in groceries, in convenience stores, in coffee stores, in fast food restaurants. This is where the contactless benefits the most, and where really consumers see the most desire to use contactless form of payment. And as those merchants actually grow and consumers see how convenient that is compared to inserting a chip card, which is in more and more of the stores now the only option to pay, a magnetic stripe being discontinued, we would see a natural acceptance and desire from the consumers, which brings us to the last slide that I have, the solving of the chicken and egg problem. I wish it was that simple, but I do believe there's logic in these arrows and this progression. Convenience is absolutely a must, and we talked about it, and we have it with contactless. Habits is when you start using it frequently, and once those two conditions are satisfied, you are going to see a natural demand. Once the demand from consumers are there, you will naturally see the issuance and acceptance growing rapidly, as we've seen it in other countries. So convenience we have, I believe habits is the next piece that we have to do in front of consumers, and prove that this is really something they can use every day, and the rest will progress naturally. Thank you, and with this I'll turn it over to Jamie.
Thanks, Nick. And I'm going to spend a few minutes talking about issuer considerations, really the questions and decisions that need to be made, as part of launching a contactless payments program. Let's go ahead and forward to the next slide. The first decision to be made, or consideration that needs to be given some thought, is the whole decision between mobile handsets, or what I'm calling an NFC-enabled mobile device, versus a dual interface card. And there are pros and cons to both. So I've tried to list them in some different categories here, some different groupings. Obviously, there are different costs and benefits to consider for both of these options, and they follow along multiple tracks. So of course, there's the upfront, or what we call the issuance costs, and that could entail the provisioning of the card to a mobile device, which certainly could have some fees associated with that, or the incremental cost of issuing a dual interface card versus a contact-only EMV card. So that's something to obviously to calculate and consider. But in addition to that, there are other costs, right? There's ongoing usage costs. So some of the mobile wallets out there that people are using currently do charge a percent or a fee for every single transaction, and there's rumors or stories about what the actual charges are in terms of basis points of transactions. I'm sure it varies based on the issuer and the circumstances, but certainly it's definitely a known fact that there are, at least for the mobile handsets and some of the mobile wallets, ongoing usage costs that really is a perpetual cost. The second thing just to think about in considering, if you want to support, a mobile handset or a dual interface card or both, and what the trade-offs are what I call, what I've termed interface redundancy. So the nature of of using a mobile handset or a mobile device to pay is that if there's a problem, if it doesn't work, and we've all, those of us who are early adopters, who are advocates of trying new things, have all had experiences where we haven't been able to use our mobile phone to pay where we thought we would be able to. If the phone doesn't work, then you have to then go back into your wallet or your purse or whatnot and fish out a card and use that to pay instead. With a dual interface card, you actually have multiple interfaces to work with, and I think the word dual interface actually is a bit of a misleading term. It's one of the few cases where marketing is underselling what you really have, because I would argue there's actually 5 interfaces to a dual interface card. So first you try tapping, and if for some reason that doesn't work, as Nick mentioned, you go to insert the chip. And if for some reason inserting the chip doesn't work, then you can swipe the card. And if for some reason swiping the card doesn't work, then you can key enter the number that's on the front of the card. And lastly, if it's not, if there is no keypad, and we've all been in taxis and car services where they don't have an electronic system, then you put the card on an old-fashioned knuckle buster. You put the carbon paper in there, and you go back and forth and imprint the numbers from the embossed numbers on your card onto the carbon. You sign that. So there's really 5 different ways that you can use a dual interface card, and that does guarantee that when someone they know that if they take that card out of their wallet, the card's going to work. And it may be the transaction might be declined for other reasons, but ultimately there is no reason why they would need to, fear that the card itself is not going to figure out a way to work. The next thing to think about, next consideration here, is what they call visibility or branding. Depending on the experience with the mobile wallet, in many cases the mobile wallet may reduce those impressions of your brand or the financial institution branding that is experienced every time a card is pulled out of a wallet. The brand of the card may not be visible during the payment experience. Once you've selected that card within the mobile wallet, you may not see that branding again, and the branding then is defaulting back to whatever particular wallet you're using on the mobile handset. So it'll be Android branding or Apple branding or Samsung branding. You may not get those same number of brand impressions as you do with someone pulling a physical card out of their wallet every time. Then on the other side of the coin is this notion of integrated functionality. Now a lot of the mobile wallets now are doing very advanced work in terms of starting to integrate either coupons and or loyalty programs into the mobile wallet, so that with a single tap you're able to get your points and pay, or redeem a coupon and pay with just a single tap. And while certainly there's a possibility of that in a physical card form factor, it doesn't seem to be as high a priority right now. So the second grouping of the issuer considerations is what I call a segmentation strategy, and that really is thinking about, okay, who are you going to offer contactless payments to? And obviously there's different strategies. There's a strategy that's good for you, but there's certainly not a single strategy that's good for everyone. So you could look, if you have both credit and debit portfolios, you might consider offering dual interface cards or NFC-enabled mobile payments to just your credit card portfolio, or to both, or just your debit card, depending on you may not have a credit portfolio that's sizable and worth the effort of going down that path. So again, there's obviously that distinction that you can consider. Then also you could consider, are you going to make it available to your entire card portfolio or just a subset of your card portfolio? So you might say, okay, so we're only going to roll out dual interface cards to our active cardholder, or we're only going to make them available to certain high net worth customers, etc. So again, there's trade-offs there. It's a combination of cost and complexity. Then the third segmentation strategy really comes down to, again, some of the cost of how you do that segmentation. So there's obviously, if a dual interface card is going to be more expensive than a contact-only card, but then there's the cost of maintaining multiple card inventory. So if you have a relatively small card portfolio, the incremental cost of maintaining multiple card inventories might exceed the incremental cost of having just going ahead and issuing dual interface cards to your entire portfolio on a a reissuance basis. So again, trade-offs there. There is no perfect answer, but some things to consider as you think through your strategy. Let's go ahead and go to the next slide. Other things you need to think about are profiles, the profiles that are personalized onto the card. Again, the different payment brands out there, whether it be Visa, MasterCard, Amex, or Discover, they all have profile recommendations or requirements, so you should definitely look to those organizations for their documentation. But again, they may have multiple profiles available, and you'll need to consider some of the trade-offs of those. You may have the ability to support what's called MSD or magstripe data contactless, or not support it. I think in most cases it's recommended to support it. I would agree with that recommendation simply because at this point most of the contactless acceptance points in the U.S. market are still only supporting magstripe data contactless transactions. They're not yet upgraded in most circumstances to support EMV contactless transactions. So if you want your card, or obviously the mobile handset would do this, you want it to be able to support, be used as frequently as possible, and you want to support MSD contactless. But it may be something that you need to specify when you're looking at profiles. Depending on the profile, you may, or the brand, that you might be required to support offline data authentication. You may have the opportunity to support offline transactions. And again, there are considerations and trade-offs of supporting offline transactions and incremental costs in some cases of supporting offline data authentication, even if you don't support offline transactions. So again, things to consider there. And lastly, obviously for a debit card, you want to make sure that you support the U.S. Common Debit AID. There will be incremental effort needed in many cases for the processing of authorization authorization messages, as well as risk management. Specifically, there are additional types of cryptograms that could be encountered with a contactless transaction than you have previously seen with a contact EMV transaction, especially if you're not currently supporting offline data authentication. So in addition to what we sort of consider the standard online EMV cryptogram, which is an application request cryptogram, or ARQC, you could also see a transaction certificate or TC cryptogram. You could see a dynamic CVV or dynamic CVC cryptogram. So again, from a processing perspective, you need to make sure that you're able to support those, or your designated processor can support those. And lastly, you need to think through all of the education and communication that's going to be needed. Just as there was communication and education needed when we went to contact EMV, there will be incremental information needed if we go to contactless transactions. So certainly you want to make sure that you communicate the benefits of the contactless option to cardholders, as well as how to use it. You need to make sure that you address security concerns, and this is, for better or worse, this is just the nature of the information that's out there. There's a lot of misinformation and a lot of misleading information and alarmist information that's in the press and certainly on the internet about the security or lack thereof of contactless transactions. So certainly you need to communicate and address those and be prepared to address questions. And That goes for the outbound communication to cardholders as well as communication and training for employees so that they can answer questions when the calls come in. The employees will also need to know how to identify which interface was used for a transaction if it comes down to questions about that. And in terms of responding to questions about the security of transactions or security of contactless or dual interface cards, you might think about having like a sleeve available. There's low-cost card sleeves that you could always mail out to someone who's adamant that they don't, that they're very, very concerned about the security of these cards. And so you could provide them with a free sleeve that would block RF signals and perhaps allay some of those concerns, just to be prepared for those. And with that, I'm going to pass it back to Randy, and hopefully we can spend some time now answering some questions that have been submitted.
Yeah, thank you very much, Jamie. So we do have a few minutes for questions. Thank you for submitting those in advance. And just as a final reminder, we will be making available the slide presentation and the audio after today's webinar is completed, and you'll receive an email with that information. So the first question I'm going to ask is to Oliver, because it was relative to some of the early discussion in this webinar. And he was talking about transaction speed and time. And could you maybe articulate differences between what an EMV DIP transaction time is versus what a contactless EMV transaction time might be?
Sure, I can do my best, and there's obviously, always going to be some variables, and I think we've, probably a lot of the people on this webinar have seen some of the worst case scenario stories, because those are the ones that get written about where, a journalist will say, I went to such and such a store and it took 20 seconds, and I think that's clearly an anomaly for a contact-based chip transaction. I've seen others being a little bit more unbiased and say, they did a number of them, the average was 7 to 8 seconds. And then I think if you look at some of the press releases from brands relative to quick chip, et cetera, they claim 2 to 3 seconds, and I'm not sure how many implementations of those there are, but clearly better than the 7 to 8 second mark. But tapping a card is always less than half a second, and again doesn't have the, I left my card in, I have to follow the prompts, and so even if it tells you after 2 seconds you can remove your card, you may not necessarily do so because you're engaged in conversation or something like that. So that's how the different factors can play in at the point of sale, but there's a clear benefit in speed to contactless regardless of what the mechanism of contact chip transaction is. So hopefully that answers to the question asker's satisfaction.
Yeah, thank you, Oliver. Next question is for Jose. You were talking about the Canada experience, and you made mention to the fact that there were limits on contactless transactions, and and something changed after the limits were increased. Can you explain what limits you referred to?
Yeah, and this are mostly non-CVM contactless transaction limits that were set by the payment brand. So with a little support of Oliver here, he provided some clarification on that. So in some cases it was non-CVM contactless transactions limits set up by the payment brands. In some other cases it might have been from the issuers. So the limits went, and this I might need to throw out at Oliver as well. I think did it start at $20, Oliver, and then jump to 50 and above now. I know you're in Canada, so you probably
25, 50, then 100, certainly for the global brands, and then I believe one of the domestic debit network has a bit of a different application whereby they allowed their issuer some flexibility, so they could set a higher limit if they wanted, but also have some functionality in there to say, I want to see a contact chip and PIN transaction online for X number of contactless transactions that I've seen, just to maintain security on a person's checking or savings account.
Yeah, and the point that we want to make is that as those in the cases that the limits were raised on the dollar amount, the usage also increased, right? So people that were using cards just for the $5 amount, $10 amount only, were using it for maybe at the grocery store for $40 amount, $50 amount, and finding new and different places where they could use the contactless cards, well, the dual interface cards.
Okay, thank you, gentlemen. Nick, this question is to you. So there's going to be an increased cost for contactless dual interface cards versus a contact-only card. Can you talk about what the difference in costs are in today's current markets, and what are the variables that might impact that cost, either by making it lower cost or higher if something else is added to?
I'm sure, Randy. I'll try and keep it quick and short, straight to the point. So what's the difference between a contact and dual interface card? In both of them, we have a single chip. Yes, the dual interface chip is slightly more complicated. It has the ability to talk to a terminal via contactless interface and also through the traditional contact. So it has additional features within the chip, like thinking about having a laptop with Wi-Fi or a laptop without Wi-Fi. I mean, over a simplified comparison. And also, because of the fact that the chip needs to talk contactless, we have an embedded antenna into the card body. This is really a net new element, and that antenna is really required for the chip to be able to talk contactlessly to the point-of-sale device. This does present a bit of a complexity compared to contact EMV cards, but it is not a drastic difference compared to the shift from Mac stripe to chip. More or less is in a similar scale in terms of add-on complexity when we compare chip versus dual interface chip. But one thing to note as well is that moving to chip technology, we're seeing issuers extending the expiration date of the cards. We're seeing less counterfeit fraud. We're seeing the overall life cycle of the card really extend compared to what it used to be. So really, if a bank is building up a business case and comparing that back to the times of issuing magnetic stripe card, these things have to be taken into considerations as well.
Yeah, and I think it's fair to say as well, so that there's probably a little bit less wear and tear on a card that's being tapped versus one that's being inserted all the time. But and Nick, it's probably worth saying as well that it's heavily dependent on volumes, et cetera, as well. So if you're ordering 10 million cards versus 10,000, the price variables differ a bit, as with contact chip, et cetera.
Thank you, Oliver. Yes.
Okay, thanks, gentlemen. We're at the top of the hour, so I think we have time for one more question, and I'm going to address this one to Jamie. Since you talked a little bit about contactless card acceptance as a factor, can you talk to the challenges that some issuers might face with piloting contactless cards where mobile phones are accepted at the point of sale, but not EMV contactless cards?
Well, the only circumstances I could think of where a mobile phone would be accepted but not a contactless card is if they're using like a QR code or some other interface that's on the phone. So it's there certainly are mobile wallets and mobile payment programs out there on with loyalty programs. Starbucks obviously is the example everyone's aware of. That's not using NFC technology or that type of technology for the actual payment interface between the mobile phone and the POS terminal or the merchant. But otherwise, if the merchant is accepting, let's say the pays, whether it be Android Pay, Apple Pay, or then a dual interface card will work in that circumstance as well, because there's really no no distinction from the POS terminal perspective of that scenario. And like I said, there are several 100,000 merchant locations or terminals out there that can accept, if not more, the dual interface cards and or mobile payments using the same technology. So there used to be lists of merchant locations. They're not so strong anymore. Certainly, Apple Pay has published lists on their websites of merchants that support Apple Pay, and those locations would also support a dual interface card that could be used for testing. I know that in working with issuers, it's always good to develop a very robust testing and pilot program, what you might call a friend and family program, and have a bunch of different scenarios of where you want to make sure you test the transaction. And you can include things like vending machines, fast food restaurants, certainly drugstores. I know Walgreens, for example, accepts contactless payments, and it does leverage contactless EMV. So you want to test at those, as well as locations that only test contactless, the magstripe data contactless. One lesson everyone's learned in EMV rollout is it's impossible to test too much, but it certainly is possible to test not enough.
Well, thank you, Jamie, and thank you all of our presenters today for your excellent content and the answers to those questions. We can just go to the last slide, Kathy. We have here the contact information if you'd like to follow up with any of the people who presented today, or you can send those inquiries to myself, and we'll try to get you answers to those questions that you might not have been asked or heard answered in today's webinar. We enjoyed presenting this to you today. Please keep an eye out for future webinars hosted by the Smart Card Alliance, and we thank you for your attention. Have everyone a great afternoon. Thank you.